I am Gerald David, CEO of Lake, live for the New York Stock Exchange trading floor. You're watching Take and Stop.
To travel with something this old and this rare and this irreplaceable is both exciting and nerve-wracking. Nerve-wracking because if something should happen to it, you cannot get another one, which is the greatest fear of, I think, any archivist. But exciting. You don't get to bring a document like this home that often.
When something turns 400, it's worth throwing a little celebration, and having this bond and having the connection between the New York Stock Exchange and the Netherlands that goes back, 400 years is really something to mark. Think about this bond. It's basically raising money to repair a dike and build a landing space for boats to land, and the whole community would benefit from it. And increasingly with climate change to not just combat climate, but also coincide with the changing world.
You look at something like this and you see not only people partaking in a tradition, but coming together for something bigger than themselves. I don't know that many people necessarily think when they buy a bond that they're doing something patriotic, and I don't know that people necessarily think of it that way, but I look at something like this and that's in many ways what I see.
When this bond was issued December 10th, 1624, it's written that every 6 months it's supposed to be brought back to where it was signed, which is where we are today, and presented, and then the interest is given. And so along the margins of it are all the years going back from 1625, 1626, moving on. It's really a cool experience to be part of it, and it's really cool how it is 400 years old, it is history, but it really is tying into a lot of the conversations we're having in Intercontinental Exchange today around valuing climate, valuing water management, and valuing these products that are, in some ways they're the oldest products we have, bonds, but also it's some of the most innovative stuff is happening in them. If you think about it, we're sitting in the Netherlands, a country that's had to think about water management for its entire existence. But now everywhere it does. If you think about closer to home in the United States, we are seeing water in places we haven't had water before. We're seeing water not in places we used to have water. And so this idea of what can you learn from, a 400-year history, and actually longer, the bond's 400 years old, but the underlying structure that the Netherlands used, is we can all learn from that as the idea of basically coming together collectively as a community to put together the funding, and also not only that, the infrastructure needed to combat or in some ways just redirect climate. We are in some ways looking back to also look forward, and our parent company, particularly Intercontinental Exchange, begins to look at the products we're going to need, not just to track and put data to climate change, but also create the investment products we need to either live alongside it, combat it, or even potentially reverse it.
This one is really a living document. It's not just capturing the purchase of debt from a company or a government. It's capturing that moment and then every year thereafter. So you have the text of the bond itself, of the agreement for how much is being lent, but then all around the edges, every single year that an interest payment was made, you have someone else's hand being affixed to this document. Someone coming year after year after year for, at this point, centuries to engage in the same fairly simple act, but a meaningful act, year after year. And so it's amazing that it's a living document. It's still serving the exact same function it served the day it was written. And that's, in many ways, the beauty of what we're here for, is to still partake in that same act that someone partook in 400 years ago.
The core of what that bond does, or what the markets do, hasn't changed, which is raise the capital needed to do something big and then help everyone hopefully benefit from that, either from what it builds or from investing in it. So what changes around it is obviously the technology, is the data, is the ability to connect things. We have bonds in the New York Stock Exchange that were sold in the Netherlands that were US bonds from the 1700s, but now instantaneously there's a global ability to invest in products and trade with each other and share information and share data.
That's the beauty of this document, is that you look at it and you see the physical evidence, line after line, of that promise kept by both sides for 400 years. and hopefully 400 more. It's an important document. It should get its due and get to see the world and get to come home once in a while.
We're here at the Health Innovation Conference 2025 at the Venetian in Las Vegas, and I'm speaking with all sorts of leaders about the future of healthcare and health technology. Well, joining me now is one of those leaders. He's the co-founder and CEO of NYSE-listed Hinge Health. Daniel Perez joins me now. Dan, welcome.
Thanks for having me.
What do you see as the future of healthcare?
Well, I think the biggest need that we have in healthcare right now is actually automation. Healthcare remains very expensive, outcomes remain inconsistent, patient experiences also remain inconsistent, and because healthcare is such a services industry, despite all the technology we see in healthcare, I think the biggest opportunity this year and frankly the next 10 and 20 years is how do we use technology to automate more aspects of healthcare delivery so we can bring costs down and improve outcomes.
Hinge Health with a major milestone this year, going public on the New York Stock Exchange. How is life treating your company as a publicly traded one?
Well, we're really excited to be public. It gives our customers added transparency in terms of how our business is performing, but frankly, my day-to-day hasn't changed too much. I am still, as CEO, focused on our product development, focused on our end users, our members with back, joint, and muscle pain, and focused on our customers. And we've been so far so good. We delivered really good Q2 earnings, really demonstrating the momentum behind automating healthcare delivery itself. And so for Hinge, it's just business as usual.
What other updates can you share over these past few months since your successful IPO at the NYSE?
So we IPO'd in May, and we've had several product launches since then, which is what I'm most excited about. So in June, we launched our high-performance in-person care network. So we're focused on technology to automate aspects of healthcare, but not all aspects of healthcare could be automated today. And so we brought in a network of thousands of providers nationwide to help us close those gaps, to give people access to in-person care, in-person physical therapy, in-person doctors, in-person imaging. We're really excited about that. And we're also moving forward several of our new AI initiatives. So actually today at Health, we're breaking news right now. We're going to be launching our new AI care assistant called Robin, which will be able to be a member of our care team and help members with questions, help them collect information to share with their care team and be able to be a force multiplier for our care team. So we're launching our AI care assistant Robin today, as well as launching enhanced computer vision technology that's going to allow us to do what we call a movement assessment. Right now, when people have knee pain, back pain, we might ask you a few questions around how your pain is evolving, how your function is evolving. With a new movement assessment, we could also take you through a battery of automated exercises. And so we could give you very objective data on your range of motion, your endurance, how well you're performing, and we could really help you track your progress over time. So really cool new AI tools we're launching.
Congratulations, Dan. Daniel Perez, co-founder and CEO of Hinge Health, recently listed on the New York Stock Exchange. Daniel, thank you.
Thanks for having me.
Investors right up to borrowers. If you think about, traditionally there was a lot of cost, origination, securitization costs. What this does is allow investors to get higher returns without taking on incremental risk. And you can do it for investment grade companies, non-investment grade. It really helps bring more credit to the system. It's good for consumers. It's good for the health of the overall financial system. And it's really good for the people we manage capital for. So we think this is an area that will continue to grow in a really big way.
Steve, talk to me about the core values behind the brand 40 years later. In what ways have any of those core values evolved? And in what ways have those core values, so important to the work at Blackstone, maintained the same?
Well, for any organization that really does well over time, there has to be a set of core values, and that involves merit, decisions, honesty, integrity, hard work, no glass ceilings, cooperation among the people, no internal politics. And if you stick to those types of values, of hard work, want to win, do it ethically, always see an opportunity, always be looking, never be totally secure in what you're doing, because finance is an industry where nothing stays the same and where there aren't great moats for most businesses. So you always have to be inventing new things. And a firm that has a culture that understands that loves doing new things and doing them with the highest standard and making sure you never lose money and your customer is always first. So if you keep that in mind, and everyone at the firm does, then you can prosper over the long term.
That's awesome. I love that response.
By the way, I would just say that when you think about the DNA of Blackstone, this is the DNA of Blackstone. His drive, his will to win, his passion, his care for the customers, the idea that we should always operate at the highest standard, be excellent at what we do, that's what powers the firm. We had our big BXTV celebration this morning, talking with everybody, and we talked about what Steve has put inside of the firm, and still does every day. He puts this electricity through the building, and it's the reason why our firm is such a special place. It's the reason why when I look forward, think about the next 40 years, I have a lot of confidence in Blackstone. This is the man who deserves the credit.
I'm almost out of time with you, gentlemen, but John, before I let you go, I would not be doing my job in 2025 without asking you something about how you're approaching the general artificial intelligence conversation. What does AI look like within Blackstone, and your expectations as that tech continues to evolve?
Well, I would say on AI, it's fundamentally transformative. This is not some passing fad. It is not a bubble. There'll be excesses, but business is going to be transformed. There's going to be this huge investment boom in chips and data centers and power, and it's going to lead to a massive productivity boom. We're trying to take advantage of it by investing in the picks and shovels, the data centers, the power, but also investing in some of the great software companies that are out there, and then also thinking about how we can transform our businesses. If we do all of that, we'll deliver for our customers. The reason the firm has had so much success for 40 years is because we focused on our customers delivering returns. As we move into this AI world, it's no different. Another reason I have a ton of optimism.
Steve Schwartzman, John Gray, congratulations on the last 40 years, gentlemen. Many wishes for success for you and the firm for another 40. Thanks a lot for being down here at the New York Stock Exchange. Great to have both of you.
Thanks. Great to talk with you.
Of course. Thank you, gentlemen. Really appreciate it. Folks, don't go anywhere. Much more Taking Stock coming up live from the NYSE trading floor after this quick break. Welcome back to the broadcast, one and all. You're watching Taking Stock live from the trading floor of the New York Stock Exchange. Let's bring in one of our very own from the trading floor, Eric Criscolo. He is a market strategist here at the New York Stock Exchange to give us his perspective on the Fed, the markets, the shutdown, you name it. We'll probably talk about it in the next few minutes. My man, thanks for being here.
My pleasure. Great to be here.
So let's start. Actually, I do want to get your general sense on price action today because we had this really strong surge through the afternoon. I did not expect the market to finish up better than 1.5%. What did you see in general markets on this Monday?
Yeah, no, I think you nailed it. I mean, we saw some positive momentum Friday. Kind of tough trading last week, but we hit Friday. Markets got some momentum. You started to see some upside coming into the weekend, and then everything just kind of kept going from there. You had the government shutdown kind of get reversed, or there was talk of that ending, so that obviously just helped sentiment overall. Tech kind of regained its footing, especially the AI trade, and then the small caps, the kind of more riskier parts of the market, the high beta names, they got a bid today, and everything just they held the levels that they had to hold, and they just took off from there.
Let me ask you a bit more about the Mag 7. We saw all 7 of them in positive territory. The strongest performing of the day were Google and NVIDIA. Microsoft finally snapping an 8-day losing streak. We're still waiting to hear quarterly results from NVIDIA, I believe, next week. What are you seeing out of those big names? Because as they go, so too tend to go the broader markets.
Yeah, no, you're absolutely right. I mean, they will push the markets higher just on their own because of their mass. And you saw them again. They stabilized. They got the bids. They kept going higher. That brought everything else up with them. The AI trade. We have actually AMD having their analyst day tomorrow. That's going to be a big event. CoreWeave reports today, probably right now. That's obviously going to be pretty important for that AI narrative, and then AI it's spreading, right? It's not just semis or compute. It's now data centers. It's now electricity providers. It's now industrial names. So there's so much tied to this trade that it's not just tech moving higher. It's everything else that's getting swept up with it.
What have we seen more broadly out of earnings season, and how impressed or somewhat unimpressed have investors been with earnings season so far to date?
Earnings have been very solid. We've seen some numbers coming out of last week where most companies are easily beating estimates. It's at a very high percentage versus historically. The beats, however, are not getting rewarded as much, and the misses are getting hit a lot more. So companies, because the bar is set so high, they're beating the expectations, but it's not quite enough to really propel the stocks higher. They're still moving up, but the earnings updraft that companies can normally see, it's not quite as big as a component for the prices to move higher as we've seen before. Again, because markets are at such high levels and the expectations are so high that it's really hard to get that second lift just from earnings alone.
As part of that, I wonder that guidance from a lot of the big companies has been somewhat muted. It can be somewhat optimistic, but we're still in the backdrop of a very uncertain state of the U.S. consumer, macroeconomic pressures. It's very difficult for these companies when they report. It's all well and good to say, hey, here's what the last 3 months looked like. A little more difficult to project what the future 3 months look like.
I never want to be a CFO or a CFO and try to make these projections going forward. But yeah, the tech companies are largely saying, listen, we're going to keep spending. We're going to keep spending on AI. We're going to keep building data centers. We're going to keep trying to figure out how to power them. That's not ending. I don't think it's going to end anytime soon. If you listen to what the big the Googles and the Metas, what they've said. But some of the other parts of the economy, it's not just AI. The consumer names, the ones that are really focused on the consumer, they're a lot more cautious, and rightly so. A lot of them are talking about that kind of K-shaped economy where the high earners are spending, and they're spending well, and everything's fine. But those that the lower income brackets, they are under pressure. And it's not just they're under pressure now, they've been under pressure for years, and it's just cumulative. And it's getting more and more hard to be somebody in that income range. And it's really starting to hit some of these people as they go out and buy less or they trade down. You're starting to see that more and more in some of those consumer names.
Yeah, absolutely, especially as we're still in a relatively high interest rate environment. I know rates are somewhat coming down, but you still really have that kind of bifurcated consumer. Before I let you go, between now and the end of the year, we will get one more FOMC decision. Lots of Fed speak. They're making the rounds this week. What do you think the Fed takes into consideration, given it has not had the usual tranche of economic data it heavily relies on to make those interest rate decisions?
Yeah, we had a few Fed speakers today. And what you can really see is the divided nature of the Fed that Chairman Powell spoke about the last time he spoke. It's not a layup as far as them cutting rates again. Market's pricing in, kind of like 60, 65% for December for a rate cut. That's obviously what the market's thinking, but that's still not 100%, right? There is still considerable doubt as to whether they cut in December. It's going to be interesting. The shutdown looks like it's going to reopen, but there's going to be a delay before that data starts to trickle out again. So, I don't know how much federal data the FOMC is going to see before they have to decide again. You just got to have to keep listening to what the Feds say, what the speakers say, monitor whatever data we can, and again, that's their decision. It's not mine. But you see what the market's pricing. I tend to go with the market, but it's been wrong before. But we'll see.
We'll have you back around Fed Day, and we'll see how things played out. Eric Crisco is a market strategist here at the New York Stock Exchange, one of our favorite go-to voices here on Wall Street. Thanks for being here.
Pleasure. Thank you.
Folks, don't go anywhere. Much more Taking Stock coming up from the New York Stock Exchange right after this quick break. Welcome back to the broadcast. Still watching Taking Stock down here on this Monday, November 10th. Welcome back to the show, one and all. Eric Chen joins me now. He is the co-founder of Injective. I'm very excited to welcome him both to the New York Stock Exchange and onto Taking Stock. It's great to have you here today.
Oh, thank you so much for having me.
Let's start first and foremost with an introduction to the work that you and your team do at Injective in the broader crypto space for anyone a bit unfamiliar.
Yeah, so Injective is a blockchain built for finance. It's a platform that enables for anyone to build extremely advanced financial primitives on top of our blockchain. That's a plug and play. It's currently, delivering more than 80 billions of volume, and so far, it's been absolutely growing rapidly.
Real world assets finally getting on chain. We've been having this conversation for a long time here on Wall Street. Where are we in that iteration and ongoing progress?
So I think one of the most amazing thing about this is that there's been $35 billion of value already minted on chain, and it signals kind of this old world clashing with the new. And currently we're seeing this growth trend not stopping at all. It's also exploring all different types of verticals beyond just some of the treasury note tokenization or some of the equity note tokenization, but it's more about turning it into like a fundraising opportunity or creating different types of like financialized assets that are enjoy and composable within the decentralized financial ecosystem.
The fact that $35 billion worth have already been tokenized, is that a surprise to you? Did you expect we would be at that high of a number, or did you maybe expect we would already be past a big number like that?
Honestly, I was quite surprised by the $35 billion number. The space was, growing kind of steadily. It was initially, like a couple hundred million, and then after like a few months, you look back and it's 500 million, and then suddenly it just ballooned all the way up to like 35 billion, especially with all the different types of institutional adoption that's coming on. Mm-hmm. So I do see the pace of this number, continuously growing. Maybe $70 billion next year, who knows? And certainly, not at all, disappointed by it, but I think it's one of the most fantastic metrics that we've all been working towards in the space for the past 10 years.
Eric, I wonder what most excites you about where the general process of tokenization is today, because people see the headlines every day, especially here if they watch the show, and it gets easy to sort of miss the numbers and miss the key things to really focus on. What reality of the space that most excites you would you want more people to pay attention to?
Yeah, I think one of the things that has been kind of missed recently is less talk about the volume and also the activity from kind of like using crypto or blockchain as a platform to engage with the globalized community, investors, traders, etc. And for Injective's case, for example, there's been $6 billion of volume done across iAsset and $1 billion of volume just last month alone, distributed across different types of equities and commodities for the global audiences. And I think that's extremely fantastic because people talk about like how much assets are minted, but not necessarily how much volume there is.
Of course, we had a big $19 billion was the total sale in skies of the crypto flash crash not long ago. What does that do for the on-chain conversation?
Yeah, the liquidation. I think this is just, again, it talks about the resilience and the volatile nature of this space as a whole. There was probably far greater than $19 billion of liquidation, actually. But we do see, a flash crash, I think, roughly on October 10th. Mm-hmm. And the space, has been largely recovering from the liquidity crunch and slowly gaining back confidence. And this is a great opportunity for different assets within the space to test their resilience and their fair pricing. And more importantly, you're seeing quality assets that are bouncing back harder than ever. That are getting repriced again at a very much more bullish valuation.
How about the state of perpetual futures contracts, Eric, and what happens to that general space when RWAs, these real-world assets, finally join the party a bit more?
Yeah, I think what's absolutely fantastic is that in the perp industry within crypto, the 1010 flash crash was definitely like a signal of like some of the weaknesses and strength across different types of platforms. So you see like Binance, having different types of like API issues, but they still demonstrated strength and like compensated their users afterwards. At the same time, there's platforms like Hyperliquid and Helix that has run continuously without any type of issue and not having a downtime. And this is again going back to the phenomenon of the old world clashing with the new, is that a lot of these on-chain decentralized primitives are actually showing stronger resilience in their system and in their kind of financial mechanisms than a lot of the existing legacy structures.
I got less than a minute, about 40 seconds or so with you left. Give me your sense on what 2026 looks like for you and the team at Injective.
I think above all else, it's we just released iBill. We're about to release the EVM in less than 10 hours, and yeah, it's one of the most phenomenal, one of the most monumental upgrade for the blockchain network since 4 years ago when it first launched. And for 2026 is about expanding aggressively and engaging with the millions and millions of developers that we just unlocked with these features.
Eric Chen is the co-founder at Injective. You got a busy next 10 hours. You still made time to come on the show?
Of course, anytime.
It's great to have you. We'll do it again soon. Thanks a lot for taking the time to join us. It's great to have you. Jeremy will grab your microphone. I think we got about 45 seconds or so left on the show. I'll give you a quick preview of what to expect here in the corridors of Wall Street tomorrow, which is, of course, Veterans Day. That means the bond market will be closed in observance. A very special, deep note of gratitude to all of our veterans, past and present. We'll hear from Fed Governor Michael Barr. He is set to speak down in Washington in the 10 o'clock hour tomorrow. We'll also hear earnings after the bell from the team at Oklo. We're talking a lot about these nuclear plays. Oklo certainly top of mind for a lot of investors. We will hear what their quarterly results were this time tomorrow. 9 a.m. NYSE and FinTech TV, rather, both down here at the New York Stock Exchange. They will count you down to the open. That's going to do it for an incredible edition here of Taking Stock, featuring the team from BlackRock and much more. Have a great night, and we will see you tomorrow.